Nigeria's stock exchange has recorded its biggest single daily gain in 2015, crossing the 34,000-point psychological level after Muhammadu Buhari was announced as a winner of Nigeria's closely fought March 28th election. But the question that a lot are asking right now in Nigeria is this: was this essentially a case of investors buying into the peace dividend in Nigeria or buying into Buhari's administration? We'll be answering that question a little later, but that's not the only thing on the agenda. We're going to details of the events that led to the killing of 34 miners in South Africa's Marikana in August 2012. And students in Uganda have brewed what they describe as a first-of-a-kind coffee in the country. We'll be determining exactly what they mean by first-of-a-kind a little later in the bulletin. But first, let's start in West Africa, where some are calling today's events in the equity markets over there the Buhari bounce. Nigeria's main equities index posted its biggest single daily gain this year in trading on Wednesday. Bond yields actually fell sharply, and the Naira also gained in the black market. Investors, it seems, are cheering Muhammadu Buhari's presidential victory. The NSE All-Share Index was up 8.4%, investors signalling the approval there of a peaceful outcome of the closely fought elections. This is the first time in Africa's most populous nation where a sitting head of state has been voted out of power through the ballot box.
Celebrations broke out early in the evening on Tuesday when it became clear that former military ruler Muhammadu Buhari had won the election, ousting the incumbent President Goodluck Jonathan. This continued into Wednesday, with investors showing their jubilation too. The Nigerian Stock Exchange All-Share Index gained a massive 8.3% to cross the psychological 34,000 points barrier, closing at 34,388 points. The local currency, the Naira, traded at 197 to the dollar. It had firmed 0.6% in the black market to 217 per dollar, according to a trader who spoke to Reuters.
You've won the vote, now you've got to win the peace, because the economy has got some very serious issues to address. Obviously with regard to the oil price, then there's the political issue with regard to Boko Haram, and all the issues underlying all of that, and the running of the country and the corruption and the inability to be trusted in terms of oil production on a reliable basis and making sure there's more inward investment coming in. So a long list of issues.
Jonathan's appeal to his own supporters that nobody's political ambition was worth the blood of any Nigerian helped calm supporters' frustrations and injected confidence in the country's economy over its political maturity.
Free and fair elections have kept my word. I've also expanded the space for Nigerians to participate in the democratic process. That is one legacy I would like to see endure.
Foreign investors fled Nigerian markets starting late last year, unnerved by political uncertainty before the vote, as well as the sharp fall in the global price of oil, which negatively impacted the currency, triggering a devaluation in November. Hundreds of people were killed in the north after Buhari lost the 2011 elections to Jonathan. Buhari became the first Nigerian to oust an incumbent president in an election, putting the ex-military ruler at the helm of Africa's biggest economy and top oil producer 30 years after he seized power in a coup. Noel Makugu, CCTV.
As you'll see a little later on in the market, that boost actually extended into other markets as well. But we'll get to that a little later. Right now, though, many a Nigerian citizen is pretty optimistic that the country's new leader will give Nigeria the change it deserves. The president-elect congratulated the incumbent and the people of Nigeria after the elections.
President Jonathan engaged in a spirited campaign and was a worthy opponent. In a more profound way, it is you, Nigerians, that have won. The people have shown their love for our nation and their belief in democracy.
Over in East Africa, China's government has reiterated that it requires all Chinese companies operating overseas to abide by the local laws in the countries they operate in. Now, that statement comes after Kenya's anti-graft watchdog published a report detailing various corruption allegations against 175 government officials. This wide-ranging report by Kenya's Ethics and Anti-Corruption Commission outlines allegations against just about every level of government, from members of parliament to senators, governors, ministers and even top civil servants.
I don't know the details regarding the question you just asked, but I can tell you in a very responsible way that the Chinese government has always demanded that Chinese companies operating in relevant countries must respect the law and operate within the rules, regulate their businesses and carry out their due social obligations.
At least 2 years later, the Farlam Commission of Inquiry, which was set up to investigate the massacre of 34 miners at the Marikana mine, has concluded its work. The workers were shot by police during a strike at the Lonmin Platinum Mine in August 2012. President Jacob Zuma ordered a full investigation into the tragedy thereafter. Since then, the commission has been holding hearings and looking into the killing of several police officers in the course of the strike. Sumitra Naidu filed this report.
The events that unfolded on the 16th of August 2012 will go down in history as another painful reminder of the disparities that exist between the rich and poor in South Africa. Mine workers had downed tools demanding higher wages. In the end, there was little victory as 34 miners and several police officers were killed. The Farlam Commission started its investigation 2 years ago. It's been a long and painful process for the families that lost their breadwinners.
One would hope that the report reflects a lot of the testimony of the victims' families, also the testimonies of the police action or inaction, exactly what they did, who was responsible for those things leading up to the massacre, the role of our political leaders in that process. That was what one would hope would be in that, and then to hold people accountable.
Over the last 2 years, the Commission spoke to families, mine workers, police, mining executives and others linked to the tragic shooting. Police Commissioner Ria Piecha and Deputy President Cyril Ramaphosa, who was at the time a shareholder and non-executive board member of Lonmin, was also called to testify. Ramaphosa had to explain an email in which he called for concomitant action, commonly known as to flush out. The Commission's findings into what happened is expected to give families some closure. However, there's growing skepticism that the Commission was biased towards the state and mining companies in its investigation, and the truth of what really happened will never surface.
I don't think there's any real commitment to help those victims or those families. Lonmin's done a little bit here and there and hiring a few people and everything in their social responsibility program, but it's very minor. I think they want to just cover it and get on with it. I think they want to forget about this. It's a very, very potentially explosive situation if the real truth comes out about who is responsible and who did what. And those in power, both economic and political, I don't think really want to open that wound and open that Pandora's box.
Rihad Desai produced a documentary detailing the events that led to the tragic shooting. While he's worried about the credibility of the report, he's hoping it will provide recommendations to have labour and policing policy changed to ensure that such an event is not repeated.
One of the key things we want to see is the tactical force team, the paramilitary police, being taken out of the public order policing units. At the moment they're operating side by side within those units. Those policemen are trained to shoot first and answer questions later. They are trained to kill. They are not trained to crowd control.
Once and if the report is made public, the families that lost their loved ones will hopefully be able to lay this tragic story to rest.
I think there will be some closure for the families, in particular in relationship to whether the miners had a plan to attack the police. The dominant narrative has been that the police had no option but to defend themselves and in the process killed these miners. What is clear is that the miners had no intention to attack themselves.
President Zuma will review the report upon his return to South Africa from Algiers, where he is currently on a state visit to strengthen trade ties. Sumitra Naidu, CCTV, Johannesburg.
Now then, let's get back to a lead story, Nigeria. Lots of attention being focused on this country, given the fact that it did hold a peaceful election on the 28th of March. It's now set for a civilian handover of power from one head of state to another elected by the ballot box. Deji Badmus has been following developments for us from Lagos. He joins us now from the country's commercial nerve centre. Deji, for those of us who are not in Nigeria and perhaps are not familiar with the process by which power is handed over, the formal swearing in happens at the end of May. So what happens between now and then?
Well, between now and then, the president of the country there's a committee that would meet. It's called the Transition Committee. Now, this committee will be made up of men from the president's camp and the president-elect's camp. So both of them would be meeting to plan the handover ceremony, because the time is very short. It's so short a time between now and May the 29th, when the handing over ceremony will take place. It's a very short time. So there'll be marathon meetings. There'll be several meetings now between men of both camps to fine-tune the details now of the handover. Remember, the president has to write his handover note and all of that. So that's what is going to happen. Then besides that, for the president-elect now, we would expect that, between now and then, he would sit down, probably be looking at the kind of people he would appoint into his cabinet and all of that. So a lot of work between now and May 29. Quite a lot of work, I must tell you.
We've also seen equities and bonds in Nigeria rallying today after the elections. Give us a sense of who exactly is driving these gains, foreign investors, domestic ones perhaps? And is this rally more about buying into Buhari's administration and his credibility, or merely the fact that investors are looking at Nigeria and saying, we had a peaceful election, let's get back into this market?
Well, it depends on who you're talking to. Some people will tell you, well, it has to do with the election. But there's no question at all. The election is part of it. But another reason for this rally is, stocks are currently trading at their lowest prices now. And you ask any stockbroker, they'll tell you this is the best time to go in. And that's probably one of the reasons you're seeing this mad rush. Of course, the issue of the election, the markets, as you know, does not like uncertainty, and now that uncertainty over the Nigerian election has been removed, people want to come back, especially for foreign investors now, and that's what we're seeing, especially with the bond market now. You see confidence now returning to the market. Foreign investors who were like holding back before, and now they now want to come back because they can see that confidence return. There's certainty. The election was not marred by violence and all of that, but majorly it has been domestic investors who have actually been plunging into the stock market, because as we speak, stocks are currently trading at their lowest prices, and people will tell you this is the right time to buy. Rama?
Let's get back to the question of who will fill what post in the Buhari administration, starting with finance. Ngozi Okonjo-Iweala, will she be retained by the incoming administration? And if not, who should we expect to replace her?
I wish I could answer that question honestly, Rama. I wish if I was in the president-elect, but to be candid, I do not see Ngozi Okonjo-Iweala retaining her position. That there's just no way that is going to happen. It's difficult to see that happen because she has been blamed severally by the opposition party for being responsible for part of the economic problems this country is going through. So as for who is going to take over from her, very difficult to hazard a guess at the moment. The president-elect and his team are currently basking in that euphoria of the election victory. So we probably have to wait until the coming days or weeks when things would have died down. I'm talking about the celebration now. That's when people will now begin to think seriously about who is likely going to take over what position and all of that. But there's no question at all that people would be looking up to Buhari. People want to see the kind of names, that will be thrown up, the kind of people that would make up his cabinet. It's very important that it's at that point that people will begin to take, begin to decide whether his government is actually going to be completely different from the outgoing government.
Indeed, Rama? We'll have to leave it there for the time being. Thank you for the update. That's Deji Badmus live in Lagos, Nigeria. Let's make a quick run through the markets here for you. As I mentioned earlier, whichever way you look at it, depending, of course, on what you believe and which perspective you take, the 8% gain in Nigeria is either a vote of confidence in the Buhari administration or a sigh of relief. The elections actually went off without a hitch altogether. Over in Kenya, Safaricom closing around 17 shillings a share. What's more surprising, however, given the fact that its balance sheet is pretty questionable at the moment, Kenya Airways closing at 8 shillings and 10 cents a share, despite the sheer amount of debt that company has taken on in the last couple of months. Coming up next, infrastructure projects in East Africa. They're down by over 50%. We'll tell you why. And Ethiopia is betting on its ancient history and majestic landscapes to woo you in as a tourist.
This report by the African Green Revolution Alliance says climate change will slash food output. Within the next 30 years, the number of malnourished people in sub-Saharan Africa could jump nearly 40%.
15 minutes into the hour, you're still watching Global Business Africa. Now, the number of large-scale infrastructure projects in East Africa fell significantly in 2014. That's according to a report on continental construction trends by Deloitte. The African Construction Trends Report of 2014 shows that only 51 projects were implemented in the region compared to 93 the previous year. The total value of the projects fell by a smaller magnitude, however, going from just under $68 billion in 2013 to about $61 billion the following year. Now, in contrast, however, the rest of the continent recorded an increase in the total value of the projects executed. Southern Africa was right to the forefront in terms of construction activity with 46% rather of the total project volume. Total project value rose significantly in Southern Africa too by $62 billion, in West Africa by $25 billion, and in Central Africa as well, that went up by $18 billion. Let's dig deeper into that report. Mark Smith is the Regional Head of Infrastructure and Capital Projects at Deloitte, is in studio with us right now. Walk us through the methodology employed in putting this report together. What criteria do you use to determine if a project makes it into it or not?
Well, thank you. This is the third year that Deloitte has undertaken this study, and what we really want to look at is what is physically being built in Africa. Not all the hype around planning, but what's being physically put into the ground. So we decided to take and look at large projects, anything that was more than 50 million US dollars in terms of what we classified as mega projects that had broken ground, that were actually physically being built within Africa and within the various regions within the continent.
Year on year also, we're seeing the scale of government financing for projects going up by quite a bit, threefold in fact, within the window we're looking at for this report. Is this all government funding sourced from debt, or is it a mix of government debt and taxpayers' money as well?
Well, what you have is what we're seeing is to jumpstart the basic infrastructure development that's happening, especially here in East Africa. A lot of it is being financed by the government through debt financing or through the large DFIs that are out there. That's the majority of it, but there's still a lot of private investment coming into Africa as it relates to some of these large infrastructure programs.
The data in the report also indicated that funding from China isn't as large as some may think, given its, shall we say, outsized reputation across several sub-Saharan African economies. Is this an anomaly in one year to another, or just part of a wider trend where international DFIs and governments just dominate funding?
Well, there's no question that China is still a dominant player in both infrastructure financing as well as building the infrastructure programs, especially around transport and ports, airports, rail. And if you combine both financing as well as building, the China banks and the companies, construction companies, are really building almost 50% of the infrastructure programs, especially here in East Africa.
One other thing, though, and this really stuck out for me, energy, transport, power, they take up a huge amount of the projects here, but water in the first place seems to get absolutely nothing. 5% of the entire project volume, rather. What is it that puts investors off water projects? Is it the general sensitivity around water issues, or is it a question of funding models that can be applied to water projects?
Well, I think there's a lot of interest in the water programs, but I think what we look at is really strategically which projects need to come online first. Basic transport, energy is by far the critical need in Africa, and especially in East Africa. So I think that's where you see a lot of the investment going. Clearly, there's a lot of water projects coming on board. In fact, there's a very large water program that's going to be financed through a PPP financing here in Kenya. So again, I think it's more of an anomaly that's a priority project that's not showing up in the data yet, but will be coming next year.
Indeed, we'll be certainly be looking forward to your data set when it comes out next year. But one last question for you. When it comes to funding road, rail, port projects. What's the preferred funding model that you're seeing in your data? Build, own, transfer, build, own, operate and transfer setups, or experiments with annuity financing like what Kenya's doing for roads?
I think what we're seeing is that if you look at the amount of infrastructure that's required in Africa, the needs there are so significant that you really have to have some pretty alternative financial methods to be able to fund these kinds of projects. PPP projects are clearly the norm now. That's going to happen more and more in Africa. But clearly, debt financing, government funding is going to still be very, very critical. But we see PPPs increasing by over 100% just over last year.
Indeed, 26 plus in the report that you did put out for 2014. Thank you for your time, Mark. Really appreciate it. He's the Regional Head of Infrastructure and Capital Projects at Deloitte. Let's take you to Ethiopia now, a country, of course, that is famous for enormous large-scale infrastructure projects, but now it's working on revamping its tourism industry by drawing on its ancient history, its cultural diversity, and some pretty epic landscapes. Now, with a rapid growing economy, the Horn of African nation is trying to change global perceptions of it from past images of war and famine. Leslie Murungu has more.
On a program to redefine itself as one of Africa's major tourist attractions. But instead of using holidays and safaris, landlocked Ethiopia is promoting its imperial past by using the below-ground 13th century churches of Lalibela and the hill castles of Gondar.
With the diversification of attraction we have, with the environment, particularly security, weather, we haven't reached where we should be today. We have number of attractions that is recognized by UNESCO, but have we made any promotion on that? No. While Kenya has a number of tourist offices abroad where they do their promotion internationally, Ethiopia has none.
Construction is booming in Addis Ababa, and a metro opens next year. It will cut through the sprawling city, the only such network in sub-Saharan Africa. Ethiopia is also building a new railway to a port in neighboring Djibouti and also expanding road networks. But challenges remain if Ethiopia is to fulfill its tourism goals. Just 3 major international chains run hotels in Addis Ababa, and operators complain that bureaucracy hinders plans for new hotels and trained service workers are in short supply.
Considering the volume of tourists that we are receiving, we are far behind many major African tourist destinations. This is the reason. The reason is that we started from a low base and we had some difficulties in between.
Still, Ethiopia is drawing a new string of tourists.
This is a peaceful country. That is good for tourists. The worst for the tourists is when there is the war. People are very friendly, without conflict with Muslims, with Christians, without conflict with the tourists. They are happy to visit the tourists, and people are happy to spend the time here.
Ethiopia's goal is to boost tourist revenues to around $3 billion next year from $2 billion in 2013, challenging the dominance of regional rivals such as Kenya and Tanzania. Leslie Murungu, CCTV.
Right, then a quick run through commodity markets here for you. Cocoa having a fairly interesting day, up 1.26%, spurred on apparently by reports of good weather in some of the key producers for that lovely commodity. Quite in contrast, however, to reports that we had earlier in the week, concerns from farmers in Cote d'Ivoire on the effect that hot, dry weather will have on the size and therefore the revenue of the beans that they do produce. Right, still on commodities, a group of university graduates in Uganda are producing a coffee liqueur, which they believe is the first of its kind in the country. Now, the group say they needed to invest in a unique product due to the abundance of coffee all over the place. Here's CCTV's Isabel Nakiria with more.
Uganda's abundant coffee fruit traditionally finds its way to the hot beverage that many people enjoy. But 6 Ugandan university graduates are making use of the coffee fruit in a very different way. The difficulty, though, is introducing the new product to the market.
So when you say liqueur, most of them would think you're pronouncing liquor in a different way. And then you have to tell them, no, there's a difference. And then you tell them, number one difference is a liqueur has a base, which is normally a fruit or something. For those that may not understand, you have to tell them, you give them examples. You tell them you drink Amarula and they say yes. Did you know it's a liqueur, not a liquor? And they be like, oh.
Their idea won an agribusiness challenge as best coffee product. The $3,000 winnings helped them grow the business.
So we had 6 ideas. For that night, we slept for only 2 hours actually, because each of you had to bring an idea and prove that it's viable. So we chose coffee liqueur as the very first idea.
From an initial 30 liters at the beginning, they now produce over 450 liters a week. Brewed from medium ground Arabica coffee, the product goes through several filtration stages. Preservatives are added and it's left to mature for at least 6 months before it's packed in bottles.
One of the contents is an extractor. It helps extract the contents that you've put in and blend them together to make one uniform product. And it gives it a smooth, fine tasting. Yeah, like an older wine, it tastes so much better compared to a new one.
The producers of the coffee liqueur are also making cocktails out of it. It's now a year since the coffee liqueur went on sale in the Ugandan market. Its makers say its demand is increasing despite it being a high-end product. The challenge now is to meet the rising demand for the product. The plan of the group is to widen their market base to include the East African region in the near future. Isabel Nakiria, CCTV, Kampala.
Right, then a quick run through the currencies here for you before we essentially close the show. We did speak about the Naira posting some gains, a bit of a bounce after the elections. We'll see exactly how this trend pans out and if those gains can hold between now and the inauguration a little later on. Now, here's what we're working on for tomorrow's program. Malawi will be spending about $20 million on maize imports. Why? Because of an unexpected drop in the harvest of that particular crop in the country this year. Also tomorrow, we'll be in Soweto. Africa's largest township will be undergoing some major changes. The plan apparently is to turn it into a leading economic hub. The question is how they're going to pull that off. We'll have the details in tomorrow's edition of the program. But that's it for today's version of Global Business. We'd like hearing what you think about what we do around here. Global Business Africa at cctv.com is the email to use. And of course, we're always on call on Facebook and on Twitter. Thank you for watching. We'll see you in the next 23 hours. I'm Ramanyan.